Have you seen the news? Grab is going to be listed quite soon. It's actually via a merger with a SPAC at a $35 billion valuation. Now, if you're in Southeast Asia or in Singapore, you do know that you use Grab for so many of its services. And Grab is definitely well known in this part of the world. But for Grab to get listed via a SPAC, you may have your questions. How exactly is it going to be worked out? In today's video, I'll be sharing with you dynamics of this whole transaction. Next, I'll be sharing with you performance, because Grab has actually produced an investor presentation. They've actually shown breakdowns of its various services. What kind of profits are they generating? And last but not least, I'll be sharing with you my thoughts on investing in this SPAC as well as investing into Grab when it eventually gets listed. So if this topic interests you, continue watching on. Hi guys, welcome back. Now, Grab is actually going through this merger with this SPAC called AGC, Altimeter Growth Corp. AGC is already listed in NYSE. And the whole idea of SPAC, which is a special purpose acquisition company, is like a blank check company meant to acquire a firm, to let it get listing much faster than a traditional IPO route. A traditional IPO route is costly, it goes through investment banks, there's a lot of paperwork, it takes 6 to 12 months. So a SPAC is a much faster way to get listing. Companies like Virgin Galactic by Richard Branson has also gone through this SPAC process. And it's pretty popular these days. But towards the end of the video, stay tuned for it. I'll give you my insights on it. So this SPAC is actually run by Brad Gerstner. Now, Brad Gerstner, he's actually very well known in the venture capital space. He has stakes in Snowflake, he has stakes in Uber, so he knows technology through and through, well qualified. And the usual question is, was the merger done now so that Grab can quickly get listing? And Grab has actually mentioned in the public statement that no, not really. They weren't rushing to get into listing via SPAC. That's a nice statement to make. But if you look around, there is actually clauses mentioned publicly that Uber in its merger with Grab has actually clauses that require Grab to get listing by 2023, if I'm not wrong, where I was doing research for this. So again, if you have benefited, smash the like button. It's taken our team many hours to look through material. And the next question you may have also is, why a SPAC and why now? So Ma, who is actually part of the leadership team in Grab, has mentioned they've been preparing for public listing for quite a long while now. And they've been looking for partners who are long-term, and Altimeter appeared to be one. And they've actually committed to a 3-year lockup, which is very unique. Now, when you go through IPO, there's usually institutional ownership. And institutional ownerships, they can sell after listing. They need not commit to a 3-year time frame. So that gives a lot of stability in terms of share price, in my opinion, less selling pressure when it eventually gets listed from now the sponsor, which is AGC. So I guess that was a sweetener that Altimeter Growth Corp threw in, because in a sea of SPAC competitions, there are so many SPACs right now in the market looking to acquire. There has to be certain reason why Grab went with AGC in the end. I think this lockup period says a lot of things. So just to recap again, Grab is going through this merger at combined valuation of $35 billion, and they actually raised a $2.5 billion via a private investment in public equity PIPE. These are all very new terms to me. I'm not 100% sure how to explain them also, but this is a kind of structure that they go through together, eventually to get listing. Now let's change gears and look a bit at Grab's growth journey thus far. Back in 2012, Grab was actually founded by Anthony Tan and Hooi Ling. They actually met in Harvard. I've seen before interviews for both of them. And just to share a bit more also, Anthony Tan is actually a son of CEO of Tan Chong Motors, listed in Singapore. So it's actually from a high net worth background. In a lot of ways, many who are born with a silver spoon, they may not have a drive to start a big company. But this guy, Anthony Tan, seems to be very ambitious, and he seems to be using his entrepreneur genes well. So kudos to him for that. So he's actually built this company with Tan Hooi Ling very well, and this journey chart actually maps out the things very well. They started in Malaysia first. They started Grab Taxi, which was rebranded to Grab. Singapore experienced Grab's growth, Philippines and Thailand, everything in 2013. As of now, they've expanded to most of other Southeast Asian countries and launched various other services, such as GrabPay coming on in 2017, such as GrabFood coming on in 2018. And the curious part that I've looking at this chart is actually Grab Defense. I know about Grab Invest. I did a review previously on cash management solutions. Grab Invest is not too bad. And Grab Defense is pretty new. I think it relates to online security. So now let's look at their footprint. This is mentioned in your presentation charts. You realize that in terms of mobility, they are number one in their category. In terms of deliveries, they are also number one. In terms of financial services, they also claim to be number one. So in a lot of ways, they dominate Southeast Asia. A lot of governments are partnering them in many ways. The next part about Grab is they have this ambition to build a super app, similar to what you see in Tencent, similar to what you see in Alipay. So Grab's super app, really wants to involve you in every single part. You buy food, you make payments, you take a ride to office, and eventually you come back, you're going to do some shopping. They want to house everything in their app itself. So Grab is the super app of Southeast Asia. Deliveries, express mobility on the left-hand side of things. Eventually, they can also make money from digital advertising. That's interesting. But the part that I would like to share a bit more with you is on the right-hand side, payments. Now, that is actually in GFG, Grab Financial Services. And then they also have quite a few things going for them. They have the Grab Pay, they have insurance, they also have loans that they are going to be able to tie up. For Grab Pay, just to share a bit more with you, in 2019 when COVID-19 struck, many countries were looking to distribute cash checks to their citizens because we had a lot of lockdown measures all over the world. So in Malaysia, the government has actually used Grab Pay to distribute monies, and this is actually mentioned also. Because when they distribute the Grab Pay wallet, it gets used for consumption. So that's a very smart way. In Indonesia, it's also been used for COVID-19 relief checks. So Grab Financial Group is really fast growing, their financial services arm. And they've actually done a fundraising at $300 million. So it's not impossible that this subsidiary of them eventually gets listed separately because it's worth that much already. So in the next section, let's touch on Grab as a group, the overall financial performances and where is growth coming from. Now, all this material is actually from Grab's investor presentation. I'll leave links below just in case you want to investigate further for yourself. The first part that I'd like to touch on next on Grab's financial performance actually comes from this summary table. They break down into three key segments: deliveries, mobility, and financial services. First one, deliveries. What we can see over here is deliveries seems to be the highest growth. From 2019 at $0.2 billion to 2020, it's grown 4 times. Now the question that I have while looking at this is also, could deliveries have seen this high growth in 2020 because there was a lot of lockdown measures? Everybody couldn't go out to buy things. Deliveries naturally was a solution. And when the world normalized past COVID-19, maybe the growth rate would slow significantly. They are projecting it to grow pretty quickly still at $0.4 billion per year for 2021, 2022, and 2023 eventually also. I believe the growth could probably come from Indonesia, as well as Philippines and Vietnam, where there is high population as well as poor infrastructure in terms of their transportation. In Singapore, deliveries seems to be subsiding quite a bit. I've actually looked at in terms of the latest stats from SingStats. For February 2021, you realize that the numbers have further stagnated at around 20%. If you compare that to mid of last year, when there was a lot of circuit breaker measures, the numbers for online deliveries was closer to 40%. So whether Singapore will provide a high growth for deliveries, I'm not too sure about it. Probably the neighboring countries in Southeast Asia. So now let's move on to mobility, and mobility is obviously Grab Car, Grab Taxi. And for mobility, you realize that 2018 to 2019 saw a jump from 0.4 billion to 0.6 billion. Take note again, in 2018, there was a merger with Uber. That was in March 2018, which means Grab actually removed one major competitor. They've actually managed to bring on more dominance in the market. So that growth could probably be attributed to that. And then we saw in 2020, the mobility numbers dropped because people were staying home a lot more. There was less demand for Grab Car, Grab Taxi. But they do project numbers to grow up significantly. 2021, expecting 0.8 billion contribution and eventually scaling this up at 0.4 billion each year. So these projections, I'm not too sure about it because I came across this report that showed that, in terms of Southeast Asia, some countries, using internet to book taxi is really quite dominant. There may not be a lot of room for further growth. It's already prevalently used already. So that kind of growth rate probably is if they manage to charge more per transaction. So let's move on to financial services. Now this could be a future crown jewel for the group itself. Now as mentioned, GFG has actually received funding already separately as a subsidiary. But what we see over here is 0.1 billion in 2018 is grown significantly to 0.4 billion. Singapore's digital bank, let's recap it again, that is won by Grab and Singtel in a collaboration. And that could probably bring in growth for 2022 onwards, where it's expected to be launched. But having said that, when they launch, they are expected to also bleed for a few years while they bring in market consumption. So that is revenue growth, not necessarily profit growth. But the interesting part from this research that I'd like to share with you also is Grab Financial has actually sold a lot of insurance policies. So that's a huge amount. There's not that many people in Singapore that buy Grab insurance, I guess. But in terms of neighboring countries, Malaysia and Indonesia, where there's big populations, quite possibly, insurance sales is getting quite widely adopted there. So let's move on to growing top-line projections that they are actually displaying in their investor presentation. You realize on the right-hand side, adjusted net revenue, they do expect 2021 to be a record at $2.3 billion. And that number, they project it to grow at a 42% compounded annual growth rate, which is very aggressive. It is possible, and let's move on to the next part, which is profitability. In terms of profitability, they have actually been losing money quite significantly in 2018, 2019. Again, the curious part is 2018, the merger with Uber has actually taken place. So they've limited competition. I thought 2019 they would be losing less money, but from this research, it's shown that possibly they've been investing, into building GrabPay, to build the Grab deliveries network. So they've actually lost even more money in 2019. But in 2020, they've actually turned around. They've actually made a profit to things, a first profit. And projecting forwards, they do believe they'll be profitable. So the question remains, should you get invested into Grab by buying AGC right now, which is listed as a SPAC? And I'll share with you my quick thoughts. But before that, let me show you the transaction overview. You realize that this transaction is going to take place in July only, July 2021. And the transaction price will be at $10 per common share. Which means from now to July 2021, they finalize things and close it. You are buying the SPAC only and it could be at a premium. After that, it merges and it becomes listed as Grab. So while I was thinking through this whole process, is it better buy now or buy it when it's eventually as Grab? My first thoughts is this whole SPAC portion, I'm not too familiar with things. There seems to be a lot of opaqueness, at least in my opinion. And I remember reading this article by Harvard, which goes to show there is a lot of dilution when you buy a SPAC itself. For every $10 in their conclusion, on average, only 2/3 get invested, 1/3 is diluted as sponsorship payments, underwriting fees, etc. and etc. But I do believe in Grab. I do believe that there's significant growth. I can see it on the ground in Singapore at least. And let me pull up this summary again to show some merits of Grab. Online food delivery is still really under-penetrated in Southeast Asia at least. It's only at 11%, which means potentially it could scale up, especially in Indonesia, especially in Vietnam, especially in Philippines. But there's always competition. Foodpanda is around. You never know when a new startup would like to come out and compete for this segment. So I'm keen on Grab. My personal approach might be to wait for it to merge fully and get listed as Grab before I get involved in ownership of the share itself. Personally, I think Grab's valuation now at $35 billion may not be too excessive actually. I know some have mentioned that, previous funding round in 2019, they were at 15 billion only. Right now, you're paying more than double that of 2019. But if you see a lot of tech firms, in 2020, they've seen a raised valuation. So Grab doubling in terms of value is actually pretty reasonable in some ways. Then if you compare this $35 billion US valuation against Singtel, which is about the same market cap, you definitely realize that one company is on the way down, one company is on the way up. 35 billion for Grab may not again be too illogical. And if you compare that to C Group, you realize that company is valued at $100 billion. Is Grab that much smaller, or Grab's potential that much smaller? So these are some points to consider in terms of the current valuation. But that's my approach. But again, this is not a buy and sell recommendation. Make sure you're comfortable with the risk involved. Make sure you understand the company's dynamics well. Now, it's taken our team many hours, so again, smash on like, it helps us, it keeps us going. Again, press on subscribe. In the next few weeks, I'll be finalizing research on Gojek, which is a formidable opponent, especially if you're interested to invest into Grab itself. So with that, I'll sign off. Stay tuned for it, smash on subscribe. I'll see you in a future video. Take care and goodbye.